Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome to a brand new episode of the Smart Property Investment Show. Grace Ormsby here. It's the beginning of 2022, the end of 2021, the beginning of 2022. So many things going on at the moment. It feels like a very good time to take a look at the market and what's going on in the space. And I feel like, as we're stepping out of one year and into another, we've got someone who's doing their own step from one position into another position. Quentin Killian, welcome to the show.
Oh, thank you, Grace. It's lovely to be here.
Quentin, you are the Real Estate Institute of the Northern Territory CEO at the moment, but yes, very early in 2022, you will be taking on the role of CEO with the Real Estate Institute of Victoria. Congratulations.
Thank you.
Very exciting. Bit of a big career move too, moving from Northern Territory down to Victoria.
Oh, it is, yes. And look, in my career, I've had the chance to move around quite a lot. I've lived and worked in Hong Kong and Singapore and New York and Sydney. Darwin has always been home base to me. So we moved up here in 1968, and on and off I've moved out and back in and out and back in. And so I looked at this opportunity and thought, yes, it's time for another move. I've done 12 and a half years in this role, and the REIV offers up a truly exciting opportunity for me to move into. So I thought, yes, put the skates on. Let's have another go at moving and another big challenge. And so come February, we're off to yet another move to somewhere I haven't worked before.
Good on you, especially I feel like, we are hearing a lot on the real estate front that there is this mass exodus leaving Victoria, and you're doing the opposite, heading in there.
Oh, somebody's got to fill the backfill of the people departing. I don't think, we talk about the movements out of cities, and I don't think it's just Melbourne. I think, Sydney has seen a similar sort of exodus of people, and that has actually been to the benefit of places like Darwin. We've actually seen quite an influx of population from people moving out of the bigger cities. In fact, going right back to June of last year, when COVID first sort of really kicked in, and the Territory opened up its borders, we saw a massive influx of population, predominantly actually from Melbourne, jumping out of there, albeit on a temporary basis. But because the COVID issue has stayed around for a lot longer than people imagined it might, a lot of those people have now become almost semi-permanent here and are looking at, can they remain in a place like Darwin or one of the regional centres and continue to work to an office in Melbourne or in Sydney or in Perth? And the answer generally is yes. And so that's actually put a lot of pressure on regional markets that were not expecting that kind of influx of people. So we've seen, shortages of supplies. We've seen rents rise dramatically. Sales volumes have gone up, all of which would have normally taken years and years and years to achieve. It's all sort of happened in a very, very short time frame.
Obviously, having lived there for so long, Quentin, have you seen anything like this before?
Well, there was a sugar hit when the Impex project. So we had the gas project with the Impex company where they built the world's largest onshore LNG plant. And that brought to town about 8,000 workers. And that gave a massive sugar hit for about 4 years, particularly into the rental market. But that dropped off as rapidly as it grew when that project finished in about 2013. And it just literally emptied the city out, and you went from peaks around 600,000 median down to around 400,000 median. So we, within a 12-month period, cut the best part of a decade of capital growth. And then it just stagnated. So to see this happen again is very exciting, but equally it's shown up a lot of the cracks in the system. We weren't ready for it. There wasn't a supply, and the supply still isn't coming through. And then as supply does come through, when you couple that with the issues that the housing industry is having, not having access to concrete, not having access to timbers for roofing. So the demand is there now, the land is freeing up, but now the construction people don't have the subcontractors or the product to be bringing forward those houses. So that demand then sits back in that rental market, which is literally full. We have a vacancy rate up here that sits around 1.3%.
Incredible. And such a bottleneck too with that supply issue. I have to ask, with, the changes that we've seen as a result of COVID-19, I think that first lockdown happened, a lot of people did foresee that some of the lifestyle changes people were making wouldn't necessarily be long-term. But then with subsequent lockdowns, it's obviously stretched over a longer period. People have kind of become more settled and more sure, I guess, in their decision-making as to what they're going to do. Do you see this being a sustainable shift, even though, there are cracks in the system appearing now? How do you see it playing out long-term up there?
Well, look, I think it is largely sustainable. I think a lot of the people who have made the move here and I must say are continuing to make a move to the Territory are doing so for lifestyle. And that's driven, I think, by the use of technology like we're using today with Zoom, and the simple fact that you can now, something you couldn't do 10 years ago, you can actually work remotely. So you can sustain a role outside of sitting in an office in Melbourne or Sydney. And that has made a huge difference to how people now perceive where they can live and how they can operate in their office. And these new hybrid models of staffing where staff are given that freedom to say, well, if you're not particularly required to be in an office, you're not public facing, then we can have a hybrid model that suits you. And so I think the whole HR environment within offices is now changing. And there isn't a reason why, and we've seen this up here, somebody who can work in an office in Melbourne is actually located in Darwin, or it's located in Port Macquarie or in Cairns. So people are now starting to look at lifestyles and say, is a big city lifestyle what I was really after? And what we've seen is a movement predominantly of families rather than young singles, because young singles pretty much can still live in the cities. They can still enjoy that inner city lifestyle, whereas families have a tendency to look for a bit more space, a bit more open air, places that are really good for rearing children. And that's one of the things the Territory, I must say, being a parent, we brought our children up here, and it really does offer a great lifestyle. And I think people are recognising that, and they have that freedom to move on a more permanent basis. Having said that, we are starting to see a little bit of a movement out. So the last few months, we are starting to see a bit more of a movement away from the Territory of some of the people who came up here, to use a coin a term, as COVID refugees, are now starting to look at some of the things that the Territory doesn't offer. We don't have a Myer, for instance. We don't have some of the bigger shopping experiences that the big cities do have. And so there is a cohort that have gone, well, that was nice for a while, but I really do miss what Melbourne has to offer. I really do miss what Sydney has to offer. And we are starting to see a little bit of a smaller exodus of some of the groups going back south again.
Interesting to bring up there. And I do note that there's a certain irony, and you're talking about everyone coming up to the Northern Territory and you're about to exodus yourself. Was there any thoughts that you could maybe do, the CEO role for the REIB remotely?
I wish we could, but it's the sort of role where you do definitely have to be there running the show. Plus the fact that I'm really intrigued about living in Melbourne. I'm really looking forward to it. We've spent half of our working life here and the other half living in big cities like Hong Kong and Singapore. And the wife and I do really enjoy some of the things that big city life has to offer.
Good on you, Quentin. We're going to come back in just a second. But before we do, to all our first-time and new property investors who are tuning in to we do have our first ever secret sauce buyer's guide to getting started on a property investing journey, powered by our partner Bluestone Home Loans. We have put a lot of time and effort into creating this cool kit that will give you everything you need to get underway and fast track your finance to get started on that first property purchase. You can do so with one of Australia's leading non-bank lenders, Bluestone Home Loans. Jump to the homepage of smartpropertyinvestment.com.au, register your details and learn how to buy property coming into 2022. See you on the other side of this break.
Looking for a blue chip Gold Coast investment property or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back to this episode. We're talking with Quentin Killian, the current REINT CEO, soon to be REIV CEO. Quentin, just before the break, we were talking all about the Northern Territory and what's been happening in the market up there. And it does sound like that sustainable growth will be coming, and it's promising news for investors from my perspective.
It is. And I was actually going to touch on that because when we went to the ad break, you were talking about getting into investment markets. And one of the big things that we have had in the Territory, probably for the last decade and a half maybe, is very high rental yields. And now they are incredibly high. We're talking rental yields that sit around the 6% mark. When you compare that with, say, Sydney or Melbourne, where you're getting 2% and 3% rental yields, you're getting double the yield, sometimes triple the yield if you're looking at places like Katherine and Alice Springs, which are outside of the metro market. And what we're finding is that with a median house price that's still sitting around about just under the $600,000 mark, but we're getting rents that are pushing upwards of about $750 to $800 to $900 a week. So for investors coming into a marketplace, and it is really good rental yields. But one of the things we have found in the past, because Darwin in particular, or even Alice Springs, is so alien to a lot of southern investors, they look at these markets and they say, well, it's outside my comfort zone. And my argument to that is stop thinking of a comfort zone. As a property investor, what you should be looking at is the bricks and mortar and what sort of yield you're getting. You have great property managers spread across the Territory who can manage these properties for you and manage them extremely well. And so if you put your property in their hands, they will look after the nuts and bolts of its operation as a rental property. What you'll be getting is rental yields that are well in excess of any other capital city in Australia. And I would thoroughly urge anybody who's looking at expanding their portfolio or getting a portfolio, have a serious look at the Territory market. With things like Zoom, you can tap into your real estate agents up here. You can talk directly to them. They can take you on site and show you rental properties using technology. It really is an opportunity for investors to get a good portfolio going and to get some good returns while the market's hot up here.
You've sold me already, Quentin. We haven't been talking for very long yet, but no, it does sound like, just great opportunities that do exist up there. And that, that rental vacancy rate, it doesn't sound like it's going to be turning around anytime soon. There's no indicators that say that sustainability isn't going to be there. So
look, as long as the pressure keeps coming on the market, and we have some major projects coming through into our economy. There's about $10 billion in defence spending happening up here over the next couple of years. We have a ship lift being built. We're now going to be producing seaplanes in the Territory. So there's jobs happening. There's a whole stack of projects coming through. We have the largest gas field in the world at Beetaloo Basin, which is going to be producing roughly 400 times Australia's entire gas needs every year. And there'll be jobs coming out of that in manufacturing. So there is going to be continued pressure on the market here, which means that we are not going to be, honestly, not keeping up with the rental market. It is going to be under pressure, I think, from now for decades to come, which means, again, from an investor's perspective, the risk you had maybe 5 to 10 years ago of not finding a tenant, that's gone. I think the risk now is for tenants finding property.
There you go. Heard it here first from Quentin Killian. This is all obviously coming, you've got this knowledge here from being the CEO of the Real Estate Institute of the Northern Territory, and now you're going into the same role, but with the Real Estate Institute of Victoria. Very exciting. Obviously involves a big shift for you, Quentin. What are some of, I guess, to start off with, what are some of the main differences that you are seeing in the Victorian market than what has sort of taken place up in the Northern Territory over the last 12 to 18 months?
I think one of the biggest differences that jumps out at me is the fact that the Melbourne market has recently gone through, and in fact is still to a large extent going through what the Territory went through a few years ago, and that is a departure of people and a massive increase in the vacancy rate. So the vacancy rate in suburban Melbourne has come up somewhere, I believe, around the 9 to 10% in inner city. Now, that will change, and it will change, I think, quite rapidly once we start getting back international students in particular and international arrivals. So as that market starts to open, but that's still, a good 12 months, 2-year plan to sort of bring it back to normality. There was an article published last week, I think from memory, in The Australian, which talked about predictions by 2030 of Melbourne reaching 6.2 million in population. If that holds true, Melbourne will recover, and it will recover within that cycle between now and, let's say, 2026, 27, which means you're going to find a fairly rapid increase in population. It's going to have a look at its infrastructure and say, if that happens and we get that sort of population growth, do we have the current housing for it, or do we have to be thinking about expanding our market, creating new stock? Because we want to try and find that magic balance, which never occurs, but that magic balance between having just a slight amount of undersupply so that the pressure on pricing is there, the pressure on the market is there, but without having that massive undersupply like we have in the Territory at the moment. So I guess that's the biggest thing that I see. Apart from the size of the market, for me, that's probably one of the big things I've got to get my head around and get used to, is the fact that, I've got a population here of 160,000 on a good day in Darwin versus 5 or 6 million.
A lot more.
So it's moving back in. From an advocacy point of view, very similar issues. We have very similar issues, in fact, right around Australia with residential tenancy acts and what governments are doing with those. So there's not a huge amount of difference. It's, again, on a different scale and some slightly different issues, but there are a lot of similarities in the way that governments look at the rental market, look at the housing market, and how we respond as an industry.
I like that you do bring up that you do see similarities between both markets, because they probably wouldn't be apparent to a lot of people. Even when you're sort of looking at, you're more likely to compare Melbourne to Sydney or maybe to Brisbane, because it's a bit of a smaller market, but not many people would be drawing that comparison between the two of them. So that gives you a really unique perspective.
Well, there is an automatic, I guess, a nuance between the bigger cities. So if you were living in Sydney or Melbourne, you would see yourself reflected in one of the other big cities. But we get together as a group of CEOs from each of the jurisdictions on a regular basis, and we talk through issues that are happening in each of our jurisdictions. And there are so many similarities on different scales with slightly different issues around. But in general, it's the same problems facing each of the markets, either are happening or have happened or about to happen. And it's almost like a cycle that goes around Australia as the population wanes and fluxes in each of those markets. So I guess from a residential point of view, you live in Melbourne or you live in Sydney, and that's your world, that's your universe. When you come together as a national group and you talk about these issues, you see that what affects Sydney also to some degree affects Melbourne. Similar things happen in Perth. On a different scale, they're happening the same in Darwin. They might affect Brisbane in a different way, but they're all very similar issues. And in particular, with the way that governments work and the way, because the governments also do the same thing. They talk to each other. The ministers talk to each other and they share ideas. And all of a sudden, you'll have a piece of legislation that wasn't really liked but was implemented in Melbourne. And all of a sudden, Adelaide picks it up and Darwin picks it up and you go, I've seen that piece of legislation before.
For sure. Yeah. So on that point, I don't want to drag this in, this isn't in any way meant to be like a dampener on all the positives we're talking about at the moment, but what are some of those issues that coming into the Victorian market you're sort of expecting to be dealing with sort of when you first start?
Look, I think it's the Residential Tenancy Act in particular is still out there, and my predecessor has done a lot of work on it and has made a lot of progress. So I guess that's one of the issues that I need to be picking up and running with, and hopefully building a good relationship with the government and the department so that we can work collectively and collegiately rather than adversarially. And the issues impact heavily not only on tenants but also on landlords, and particularly on landlords. And one must always try and find that balance between being fair and equitable to a tenant, but at the same time understanding that the landlord is the person who's invested all of their money into that property. They need a return. They need a commercial return. They didn't do it as a social favour, and therefore they need some equity from an act as well. So it's arguing a case for a good, fair and equitable balance of legislation that meets the needs of a tenant but equally gives that surety and comfort to a landlord that they can look after their property, that they can maintain it, that they can get their returns on it.
For sure. Do you see that, I guess, with the rental vacancy rates being as high as they are down in Victoria at the moment, does that change that advocacy piece in any respect? Is there a swing either way towards which way it might go based on what the actual market's doing at the time?
I would suggest that if that was a long-term trend, if I was looking at the vacancy rates and saying, heck, I don't think that they're going to improve for the next 20 years, then yes, it might change the narrative quite a great deal. But to be quite honest, I think Melbourne in particular is one of those vibrant cities that will rebound, and it will rebound fairly quickly. It might take 2 or 3 years to bring it back to where its vibrancy was, but it's not going to take long. It's a city that draws people in, and it's a city that will draw them back, over a period of time. So I think the narrative is only a temporary one with the change. And I think the argument still needs to be made. If you look further into the future, you're going to get back to that more balanced vacancy rate, which is coming back down around the 2 to 3% where it used to be, and possibly even lower. And that puts the narrative back into where it sat 2 or 3 years ago before COVID.
Some good points made there, Quentin. We're going to take another quick break. We'll be back soon with more insights from yourself and maybe some crystal ball gazing.
The mark of financial success isn't about getting bigger, better, faster or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back to this special podcast episode. We're chatting with Quentin Killian, the current CEO of the Real Estate Institute of the Northern Territory, soon to be CEO of the Real Estate Institute of Victoria. Quentin, before the break, you were talking a lot about, the Melbourne market, what's to be expected over the next couple of years. There's some positive signs by the sound of it. Obviously, there's not much balance there at the moment between tenants and landlords due to those really high vacancy rates, but it doesn't sound like they're going to stick around because a lot of people will be doing what you're doing and heading in there to experience Melbourne.
Yeah, and look, little signs like just recently, one of the major medical manufacturers has announced that they're opening a new factory in Melbourne, which is potentially about 1,000 jobs coming out of that factory, which I'm led to believe will be fully operational within about the next 2 years. So Melbourne has a good degree of new business opening up, as well as established businesses that potentially have geared back over the COVID period, which will be reinvigorating, and they will be looking for employment. And so while we're going through a process of the so-called Great Resignation and people moving elsewhere and it becoming more and more difficult to find the talent, I think that will change in the next couple of years. I think it will start to right itself and people will find where they want to be. They'll see job opportunities, and a number of those job opportunities are back in the big city, albeit that you might want to live slightly regionally, but things like manufacturing, they're a hands-on situation. You can't do that via Zoom. You physically have to be there and building something or making something. And I think those opportunities are still very prevalent in Victoria, and I think that will start drawing people back when those jobs are there and they pay well and they offer that lifestyle opportunity for people to move into new jobs.
And I guess we kind of can't forget either, really, that Melbourne is just an attractive city, to be. Obviously,
I think so. And that's one of the reasons that, apart from the fact that this is the most fantastic job opportunity that I've had in a long time, so I'm very excited about the role itself. But Melbourne, for me, is a city of culture. I spent a number of years living in Sydney and working in the satellite industry a few years ago. And Sydney was a great city to live in, but it's I guess it's the brash young cousin. It's a fun city, but Melbourne has that culture. It has wonderful restaurants, it has the arts, it has the theatre, and it has something quite special about it. It's an old world charm.
I was about to say be careful what you say there, but I do completely agree with all your sentiments just there. It's true.
Yeah, and look, every city that I've had the opportunity to live in has had its uniqueness about it. So, Darwin has been very laid back compared to the big cities, but it's just been a wonderful place to live and to grow up. And Singapore, fantastic, but it's busy, busy, busy. Hong Kong, an amazing city, but it's crammed in, but it's also open 24 hours a day. It's like the New York of the East. So every city has its uniqueness about it. And I think one of the things that Melbourne has about it is that old world charm, that character.
And that, I guess, there is still that attraction there for even investors, anyone buying, you're buying into something that's probably a bit greater than just, the building or the apartment itself.
Well, I would suggest, and earlier we talked about pricing being a good point for investors to be looking at, and yields. And so while your yields in Melbourne at the moment might be a little bit lower than some of the other markets, your pricing has also come back off. And I think that should be something that investors have a good, serious look at. Is Melbourne is a big market. So it's a big, broad market. You've got everything from your high-end suburbs to your lower-end suburbs, which are a good entry point for investors. Because remember that investors want to get yields, which means they're looking for renters. So if you're coming in at the lower end of the market, at the moment, the way the market is, you can probably capture some very, very good bargains as far as getting in on your purchase price, which then sets a rental yield at 3 to 4% at a very good margin, because you're not expending a lot up front to get into that investment property. And I think you might potentially struggle a little bit. You might have to go into this, do some negative gearing for the first couple of years. But as I said earlier, I really do believe that the Melbourne market is swinging back already. And the more that you start to see international students and international arrivals come back, and the growth that's going to happen in the manufacturing sector there is going to bring population back in. A bulk of that population is going to be looking for rental property. So if you've set yourself up now, the next couple of years are going to be that growth for you in that investment market.
Interesting things to note there, Quentin. Before we do finish up this episode, we've obviously seen a lot of predictions over the last few months about what people can be expecting from 2022. Let's go more broadly, Australia-wide. I don't want to pigeonhole you into having to make any forecasts or predictions. Don't worry, we're not going to hold them to you down the track. But, there's been a lot of talk about double-digit growth over the next 12 months. Do you think that will come to fruition?
Look, it's so hard to nail down an absolute there, because there are so many external factors that can change the whole way the market reacts. One of the biggest factors is going to be whether or not the Reserve Bank moves on interest rates in 2022 or 23 or 24. The sooner the Reserve Bank starts to move on interest rates, the tougher it's going to be for first-home buyers to get into the market, because the more that they push the interest rate up, the more expensive loans become. So the longer they stay out of that interest rate move, the more opportunity we have for that lower end, that first home buyer growth to come into the marketplace. Once they start, we will see fairly quick movements, I think, by banks in pushing their mortgage rates up. So that, to me, is probably the biggest factor as to whether we do see double-digit growth or whether we see a slightly less level of growth. But I still think growth is going to occur. I think the market is still primed for people to be getting into it. I would wholly still encourage anywhere in Australia that's watching this, if you are a first home buyer or thinking about it, don't sit on the fence. Every time you sit on the fence and think about it, you've missed an opportunity. If it's in your mind and you've got the finance or you get the finance approved, as I always say to people, the best time to buy a house is now. Whenever you're ready, that's the best time to buy a house. Don't sit around and think about it, just do it.
Some very sage advice there. Quentin, thank you so much for taking the time today. I know it is a really, really busy point of the year. Everyone's got lots going on, and you've obviously got a few things to wrap up before you do head down to Victoria. So thank you so much for taking the time.
Grace, it's been my absolute pleasure.
I look forward to seeing you in Victoria next time, I'm assuming.
Well, hopefully once I've got my feet under the desk for a while and got my head around the Victorian market, I'd be more than happy to come back and have another chat with you.
Sounds great. I can't wait to hear how you find Melbourne as well. But thank you again. Been a great episode from you, Quentin. If you are listening to this episode and enjoyed it, please like or review us on whatever platform that you're using to listen in, and make sure you're staying up to date with all the latest investment news on smartpropertyinvestment.com.au, as well as on our social media, Facebook, Twitter, and LinkedIn. As always, if you have any questions for myself or anyone here at the SBI team, don't hesitate to reach out at editor@smartpropertyinvestment.com.au. That's all we do have time for today. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to secure finance to maximise your returns on your investment property? Finny can help. With access to over 70 lenders, Finny can find the right finance for your unique situation. So whether you're ready to refinance for a better rate, improve your cash flow, release equity to grow your portfolio, or are looking to find the right finance for your next purchase, we're here to help. Visit finny.com.au today to learn more.